All righty, folks, we are recording this at 10 a.m. on Monday morning, and at the moment, the Dow Jones Industrial Average is down 1,000 points. That marks the third day in a row of over 1,000 points. And I am starting to hear from more and more people in my past network, because they know I have this channel, talking about, frankly, sheer panic. We've got people in my network talking about selling gold that they've held on for decades. I have friends that are big in crypto talking about selling crypto. I have people talking about going to cash. And all I have to say is, I'm glad I'm in real estate. Let's have a conversation with Casey from Brick by Brick Wealth. How you doing, Casey? This stock market craziness is entertaining for me to watch from the sidelines. What's going on with you?
It is. It's really entertaining. And I got to say, I'm really glad that we don't invest heavily in the stock market. And I'll tell you a lesson I learned through somebody else a few years ago. I'll tell that little quick story in a second. But we just do the 401k. My husband gets matching from work. He's been investing in his 401k since he got his big boy job out of college. And it doesn't take tons of extra money. We put the money in there, but that's not where the bulk of our money is. The bulk of our assets and our net worth is all in real estate, because real estate is the safe bet. The rents and values of the properties rise with inflation. There's just not going to be a lot of downtime with real estate. So I see the stock market, crash happening, and it's already on YouTube. Stock market crash of 2025. That's already the keyword titles and all the searches. But I'm not really too scared. We lost. I asked my husband, I said, hey, Blake, just check, like, how much is, your 401k down? He checked, he's like, oh, 35,000. And he's like, it dropped in 2 days, $35,000. And I was like, oh, okay. And that's it. It will go back up.
Yeah. It's funny. I obviously somebody's had a channel now for 6 or 7 years, 15,000 plus videos. I get a lot of feedback over the years from stock folks. Obviously, let's not forget, stocks went up 20% in 22, right? 23 and 24, whatever it was, 2 great years in a row. So there's, corrections, now bear market. These are part of the cycles. But it is very interesting for me, again, as somebody who's on the sidelines, to watch consumer behavior repeat itself. I mean, how often have we heard people say, you make your money when you buy low, sell high, all of those things. And the last couple of years, people have been piling in by the dip. A lot of people, unfortunately, have gone to margin, and they're getting smashed. And now they're emotionally selling. I mean, word on the street is there's actually some Wall Street hedge funds that got caught off sides and are selling indiscriminately now. Again, this is just more proof positive that I am happy that we chose the slow and steady route. We chose very conservative leverage. We chose 30-year debt. We chose an asset with tax advantages. We chose an asset that produced cash flow day one we bought it. And we could sit on the sidelines. And I'll tell you one other thing that's really crazy. As somebody on the sidelines, I've actually bought stock the last 2 days. Not only that, I have moved cash into my stock account so I could buy more stocks. And the only reason I could do that is because of real estate. It's because I have this anchor, this foundation that is, rock solid for us. And, I could look to buy in, and it could be a falling knife. I mean, I've heard some people talk about, we might be down 50% because of this tariff and recession and depression and trade war and all of that. And I'm like, great, I'll just dollar cost average every week until this thing turns around, because like you said, it will eventually.
It will.
But real estate, it doesn't move like this. I'm so happy to be in real estate.
Yeah, me too. And I'll tell you my quick story. So back in 2000, I think it was 2008, right? Stock market crash, real estate crash, all that. I was working a part-time job in Southern California while I was a real estate agent. And I wouldn't go in there part-time, right, a few days a week for a few hours a day. And there was a lady there, and I won't say her name, but there was a lady, and she was 52 or something, like she was early 50s. She had worked there for 30 years and she was going to retire. She was ready to retire. So all she was talking about, she was so excited. Her and her husband played all her cards right. They invested in their 401k. They saved their money. They paid off their house. They did all the right things. And then she lost 40% of her 401k portfolio. And I remember I was walking by to the copy machine and she's at her desk in her office crying. I'm like, what is this like strong woman? Like, what is she doing crying? And she says, Casey, I have to work another 5 years. Like, I lost 40% of my 401k. I can't retire and I have to work more. So for us, like where the 401k doesn't really matter right now, it matters to people if now is the time they're trying to cash out. Because how long is it going to take to get back up there? It will eventually, just like any crash in any industry and anything will get back. It will get back. But, you know, just like the real estate market crash in 08, it took, depending upon the market, 7 years before property values in some areas went back to where they were at before. So 5 years she had to work extra that she wasn't planning on because of the stock market crash. And that was my wake up call to not only rely, and I was in my 20s. I said, I am not relying on a 401k because the time that I want to cash out, that I'm going to need the money, right? It might not be there for me.
No, I think that's really wise.
That's why real estate is so powerful for me.
Yeah, that's a really great story. And unfortunately, there's probably plenty of 52-year-olds and 62-year-olds now today thinking that they got to work an extra 2 or 3 years, right? We're down in most indices 20%. You know, there's no seemingly bottom. The trade war appears to be getting worse with China ratcheting up, and now Trump's threatening another 50. We've got European Union talking about retaliation. This could get a lot uglier before it gets better. And it's funny, I was listening to Tom Nash, shout out Tom Nash, somebody who's big in the stock market. He did some research around, and so did Dan Bird on our channel. Let's give him props too, about the last 8 or 9 crashes. And a lot of people today remember the COVID crash, right? The COVID crash was down and we recovered something like in 3 months. Folks, that's not normal. That is the ultimate V-shaped recovery, right? A lot of people who are investing today are maybe hopeful that that same thing will occur. And shoot, it's possible. I have no idea. I don't know that it's probable, but it's certainly possible. And I'm glad you brought up the .com era, because that is the other extreme. A lot of the crashes we have been through over the last 50 years we were back there in 9 months or less. The .com crash was 2 years of hell. It was just slowly down, ultimately going down. I think it was 47. It might've been 51%. Let's just call it half. And then it took like 6 years to get back, right? The lost decade was often talked about. So nobody has any idea how low this is going to go. And nobody has any idea how long it will take to get back. Real estate, fixed rate debt, 30-year financing, cash flows day one, bought in the right markets, tax advantage, tenants pay the mortgage. It's just more stable and more secure. And it's funny you bring this up, because at 30 years old, when I got started, my whole goal, Casey, was 4 properties. And why did I want 4? Because I wanted 4 properties to complement my 401k. I wanted that extra option to have free and clear properties, debt-free, that I could sell, I could refi, I could trade, whatever I wanted to do. I knew, like you, that I needed something on top of my 401k. And that was going to be 4 single-family homes. That was my goal when I got started.
I love it. And, you know, our goal was 10 and we're at 9. We're slow. But
it's okay. One at a time. One rental at a time.
One at a time. And that's what we do, brick by brick, right? Just one a year on average. And, you know, we are single income, you know, not even for a majority, not even 100,000 a year. We're like right. Real average American. Okay.
Right.
So, you know, and I'll say the one thing that we really forgot about, Michael, that is like, okay, well, whether it's 6 or 8 or 9 or 10, rental increases, I forgot about that early on. I forgot about rent increasing over time. So my initial goal was we need 10 properties at $100,000 a month to make $100,000 a year. Right back then, and even now, $100,000 a year is good income. We have $100,000 a year, it would be great. Well, buying one a year, you're getting rental increases. You're getting increased cash flow every single year, minus property taxes. Sometimes like drop that down a notch, but then you're back right up going. And I think it was when we were at property 6, we met our 100,000 a year with just 6 properties because of buying in the right location, buying quality properties that rented well and had good rental appreciation for the rent increases. We only needed 6. So like 9, like we're way more than 100 now, and it's really cool. And what I love about real estate versus the stock market, and we'll continue to invest in the stock market, it's not going to be our only nest egg. It's not our nut. It's our extra. It's our extra.
Right. I love that.
Because I don't know when I'm going to want to cash out or quit the game or whatever, or who knows what could happen in anyone's life when you need the money. You could go brain dead, or, you could lose a family member, whatever traumatic thing you could have in your life. You don't know where you'll be at financially at any one point. So you want to make sure that no matter when you have to say, I need the money, it will be there. And
Absolutely.
with real estate, it will be there because, even if there's a crash and my property values go down significantly, I bought properties 8 years ago. They can go down 20, 30%, and I'm still going to be able to sell for a profit.
Yeah.
Or I'm still going to be able to get cash flow from the rental income. So it's just super safe.
Yeah, I think there's so many things about real estate. And one of the things that I think is going to be very interesting over the next 90 days is in the very short term, we're talking weeks at this point, you're going to see a lot of investors freak out, go to cash, all of that. But I think what will happen over the next 90 days to 6 months is real estate will start looking sexy again because it doesn't crash, because of cash flow, because you can buy it right, because of motivated sellers. It's really funny to think that I think 2025 is going to be the year of the real estate investor. Home buyers are freaking out. Sellers are freaking out. And guess what? Investors who do the work know the numbers. We can write disrespectful offers. We can find motivated sellers. And I truly believe that the investors that do the work will find some amazing deals this year because we're not panicking. We're striking while the market is freaking out. So I'm excited for 2025. I'm really happy we're in real estate, that we can sit on the sidelines and go, oh, wow, $35,000 drop. Oh, wow, I could buy stocks on sale. So I like what we've chosen.
What we're headed to do. My daughter even said, because she listens to the news a bit, Mom, can I go open the Fidelity account and put my $1,000 in stocks? I'm like, yes. And my husband reminds me, Casey, you have your solo 401k. Now's a good time to go buy. So, he's like, time to buy, go buy now. You never know when the bottom's going to be. And if it's gone down enough, get in. You won't know the bottom until it's past you and it's on its way up.
There you go. Well, Casey, where can people follow you?
People can follow me on YouTube at Brick by Brick Wealth, as well as Instagram, Brick by Brick Wealth. And obviously you can check out what I got going on my website, brickbybrickwealth.com.
Very well done. Take care.